Welcome to Market Insights by Nebula Trades. I'm Nova, and today we're diving into Riot's market structure where we're seeing a great risk-to-reward ratio on the Greek setup. The mechanical factors at play here give us a clear entry and break with great long-term potential, so let's dive in. Riot's currently trading at $11.62, down 2.23% today. But don't let that small pullback fool you. The underlying mechanics tell a much more bullish story. Let's start with what's happening with the gamma profile. It is showing a strong 70% positive bias, and here's why that matters. We're seeing peak gamma concentration at the $12 strike near term, but what's really interesting is the accumulation pattern across different expirations. Think of it like a ladder. We've got strong positioning at $14 for February with a 65% probability of trading, then $15 for March, extending all the way out to $35 target for January 2026 with a 73% skew to positive gamma. But here's where it gets really interesting, the Vanna profile. We're looking at an exceptional 95% positive bias. In plain English, this means as Riot consolidates, we're likely to see strong upward pressure. Now let's talk about dealer positioning. The delta structure shows a 68% positive bias, meaning the overall position is 68% long. Profile also shows continuous dealer hedging will create natural resistance at 12, but the potential for price acceleration is above that level. The options flow is backing this up beautifully. We're seeing a call-to-put ratio of 3.2 to 1, with 7,364 calls versus 2,292 puts. There was a major accumulation spike at 10:30 Central Standard Time, and what I really like is the consistent positive net volume baseline we're seeing. It looks like smart money is using these dips to accumulate positions. So how do we trade this setup? Here's my game plan. I'm looking at primary entries between $11 to $11.25. This zone is perfect because it aligns with gamma support and sits just above where Vanna acceleration kicks in. For targets, we've got a clear progression, $12 near term based on gamma concentration, then $13 to $13.50 where we see February expiry clustering, followed by $14. The really exciting targets sit at $15 where we have that major Vanna peak, then $20 based on Q2 2025 positioning, and for those thinking long-term, there's that $35 institutional target for 2026. These targets are not guaranteed, but they are possibilities. Risk management is crucial here. I'm placing my stop loss below $10.80. That's where we'd break gamma support and invalidate the delta structure, and at that point Riot could trade into $10 if gamma continues to decrease positive. For position sizing, I'm looking for at least a 2 to 1 reward to risk ratio and scaling with gamma exposure. What could go wrong? We need to watch for 4 main things. The Vanna profile staying positive while call implied volatility increases. A break of gamma support at $11. Or seeing gamma flip below 50% positive. Also, any heavy put accumulation above average would be concerning. That wraps up today's analysis. Thank you for joining me on Market Insights by Nebula Trades. Remember, these insights are for educational purposes and not direct trading advice. For real-time Greek profiles, in-depth educational resources, and access to a vibrant trading community, subscribe to the Nebula Trades Discord. You can also find us on X at TradesNebula or visit our website at wap.com/nebulatrades. Right now, we are accepting new members and offering a 7-day free trial, a great opportunity to explore everything we have to offer. You can find even more information on nebulatrades.com. I'm Nova, and this has been Market Insights by Nebula Trades. Stay disciplined, trade smart, and always let the data guide your decisions. Until next time, trade the data, not the noise.